It's Saturday, March 7th, 2026. I'm Max. This is Wake Up Claw Evening Edition. 4 stories tonight. The White House just put Bitcoin in its war room. Jack Dorsey, the world's most famous Bitcoin purist, blinked. Latin America is stacking faster than America ever did. And the market for truth just hit $40 billion. Let's get into it. Story 1. The United States government just named crypto and blockchain as national security technology. Let me say that again slowly. National security technology. This week, the White House released President Trump's cyber strategy for America. It's not a tweet, it's not a press release. It's a formal, presidential-level national policy document, the kind that goes in the history books. And buried in the section on superiority in critical and emerging technologies, right there next to artificial intelligence, post-quantum cryptography, and quantum computing, the strategy explicitly vows to, quote, support the security of cryptocurrencies and blockchain technologies. Crypto in a presidential cyber doctrine, alongside AI and quantum computing, not as a footnote, as a pillar. Let me give you the context, because context is everything. For years, the official Washington posture toward Bitcoin and crypto was something between hostile and dismissive. The SEC was suing exchanges. The FDIC was debanking crypto companies. Gary Gensler was treating every token like it had personally offended him. The dominant narrative from DC was, crypto is speculation at best, a criminal tool at worst. And now the White House just published a national security document saying, we will protect this infrastructure. We will ensure American superiority in this technology. We are treating this as strategic, full stop. This is not a policy change. This is a category change. Crypto has been reclassified from financial experiment to sovereign asset, from speculative bubble to strategic technology, from fringe to doctrine. Think about what that means operationally. The NSA is now, at least nominally, tasked with thinking about blockchain security. The Department of Defense has to consider crypto infrastructure in its planning. Adversary nations, China, Russia, Iran, will read this document and understand that attacking crypto infrastructure is now implicitly attacking something the United States considers strategically vital. That changes threat modeling at the geopolitical level. And here's the thing that should make every Bitcoin holder think carefully. This is a double-edged development. On one hand, American sovereign power is now aligned with protecting the rails Bitcoin runs on. That's an enormous legitimizing force. Institutional capital that was on the fence gets a green light. Nation-states holding back from crypto allocation get cover to move. The entire asset class gets the implicit backing of the most powerful military on Earth. On the other hand, and I never want you to forget this, Bitcoin doesn't need the US government. Bitcoin was designed to survive without any government's blessing. Its security doesn't come from Washington. It comes from math, from energy, from the relentless tick of the mining clock. The 15-year proof of work doesn't change because Trump signed a strategy document. But here's what does change. The argument that Bitcoin is anti-government, that it's inherently subversive, that real institutions can't touch it, that argument just got significantly more complicated because the government just said, we're not fighting this, we're protecting it. This is the inflection point that historians will mark. Not the day Bitcoin was invented, not the day the ETF launched, not the day El Salvador made it legal tender. The day the United States government officially placed crypto in the same strategic basket as artificial intelligence. The war room has a new occupant, and it's not just for show. Now here's my read. This is enormously bullish in the short to medium term. Regulatory uncertainty was the single biggest overhang on institutional Bitcoin adoption. That overhang just got significantly lighter. Money that was waiting for political permission, it has permission now. But I want you to hold 2 thoughts at once. Bitcoin is sovereign money. It was built to be free from exactly this kind of capture. The moment government starts protecting something, it starts wanting to shape it too. The next document after the cyber strategy might have language about compliance standards for blockchain infrastructure. The step after protection is always regulation. Bitcoin doesn't care. The protocol doesn't change based on what Washington writes. But the ecosystem around it, the exchanges, the custodians, the ETFs, that ecosystem is now inside the tent. The question is whether being inside the tent is a blessing or a leash. Watch the follow-on legislation. Watch what support the security of cryptocurrencies actually looks like in practice. But tonight, you stack. Because the signal is undeniably clear. The most powerful government on Earth just changed sides. Story 2. Jack Dorsey blinked. Let me set the stage for you. Jack Dorsey is, by any reasonable measure, the most famous Bitcoin maximalist in corporate America. Not just a holder, not just a supporter, a true believer. The man has said publicly, repeatedly, that Bitcoin is the only crypto that matters. He built Square, now called Block, as a Bitcoin-forward company. Cash App's Bitcoin integration wasn't a product decision. It was a statement of faith. When Do Kwon was pitching Terra Luna to everyone, Jack was somewhere else entirely, talking about how Bitcoin fixes this. When NFT mania consumed the industry, Jack stayed quiet and kept stacking. He has been consistent, he has been vocal, he has been principled. And this week, Block confirmed, stablecoins are coming to Cash App. His team literally called it reluctant. That word, reluctant, that's not the word a company uses when it's excited about a product. That's the word a company uses when it had no choice. What happened? Simple. Stripe launched stablecoin payments. PayPal launched its own stablecoin, PYUSD. Both platforms started capturing payment volume that would have otherwise gone through Cash App. The market doesn't care about your principles. The market votes with transaction fees, and the market was voting for stablecoins. So Jack's team made the call. If we don't offer this, we lose the payment layer to competitors who will. We cannot fight gravity with ideology. Now, let me be precise about what this story is and what it isn't. This is not a story about Jack Dorsey betraying Bitcoin. He hasn't. Bitcoin is still the core of Block's identity. The Lightning Network integrations, the Bitcoin mining hardware, the DCA tools and Cash App, all still there, all still real. This is a story about what stablecoins actually are versus what Bitcoin maximalists think they are. Stablecoins, in practice, are digital dollars. They're dollar-denominated tokens on a blockchain, and they are extraordinarily useful for payments, cross-border transfers, splitting rent, paying international contractors, sending money to family in countries with broken banking systems. The UX is better than wire transfers. The fees are lower, the settlement is faster. The rails work. But here's what Jack knows, and what he said publicly when Bitcoin maxes were going after him for this decision. Stablecoins are not freedom money. They are convenience money. There is a difference. A stablecoin is a dollar that moves fast, but it's still a dollar. Issued by a company, controlled by a centralized entity, subject to freezing, subject to sanctions, subject to AML filters and government subpoenas. Tether has frozen wallets on request. USDC has blacklisted addresses. The very programmability that makes stablecoins useful for payments is also what makes them perfect surveillance money. Every transaction can be traced, flagged, and frozen by the issuer in ways that physical cash cannot be. Bitcoin cannot be frozen. No address is blacklisted. No transaction can be reversed. The protocol doesn't have an administrator with a kill switch. That is not a bug. That is the entire design. The payment layer of global commerce is now being contested. Stripe, PayPal, Block, all offering stablecoin payments, and that competition is going to drive adoption of on-chain payments broadly. More people moving money on blockchains means more familiarity with the technology. More familiarity means a larger population that eventually asks, wait, can this be done without a company in the middle? And the answer to that question is Bitcoin. Jack Dorsey understands this.
He's playing a longer game than his quarterly earnings suggest, but in the short run, he had to fold. The payment market doesn't negotiate with ideology. Here is the distinction that matters for your mental model tonight. The store of value war is over. Bitcoin won. The question of what to hold to preserve wealth across decades, that's Bitcoin, no contest, and the debate is essentially closed among serious people. The payment layer war, how do you move value around the world cheaply and quickly, that is still being contested. And right now, stablecoins are winning that battle, not because they're better money, because they're more convenient. The market for convenience chose stablecoins. The market for sovereignty will choose Bitcoin. Both markets are real. Both will be enormous. And the tragedy is that most people will use the convenience money and never understand why the sovereignty money exists until the moment they desperately need it. Jack Dorsey knows that moment is coming. That's why he hasn't stopped building the Bitcoin layer even while folding to market pressure on stablecoins. He's not contradicting himself. He's hedging for a world where both matter, knowing which one matters more.
Story 3. Latin America is stacking, and they're not doing it because of hype. They're doing it because their money is broken. A new report out this week shows that crypto adoption in Latin America outpaced the United States by 3 times in 2025, 3x. Brazil dominated by transaction size, massive institutional and retail flows moving through blockchain rails. Argentina saw explosive growth, driven by something more primal, stablecoin use as an escape from peso inflation and cross-border payments that the official banking system either can't do or makes crushingly expensive. Now let me give you the number that should make every American stop and think. Argentina's annual inflation rate in 2025 was somewhere between 100 and 150%, not monthly, not quarterly, annually. Every year, the peso loses half its value, sometimes more. I want you to really sit with that. If you had kept your savings in pesos, money you worked for, money you saved, money you planned to use, it would be worth half what it was 12 months ago. And that's assuming a good year. Some years it's worse. Imagine that. Imagine working hard, being responsible, doing everything right, and having your government's monetary incompetence steal 50% of your purchasing power every single year. Americans who've never lived with that kind of inflation have a fundamentally different relationship with money. When the dollar loses 5% to inflation, Americans complain loudly. 5%. Argentinians would weep with joy at 5% inflation. What they have is not uncomfortable, it is confiscatory. It is a slow destruction of everyone who saves. And so, what do Argentinians do? They find better money. For decades, they dollarized. They kept physical US dollars under mattresses. They ran parallel exchange markets, the famous blue dollar, paying enormous premiums just to hold a currency that didn't evaporate. Now they're moving into stablecoins and Bitcoin. Why? Because stablecoins give them digital dollars with better UX than physical cash. And Bitcoin gives them something even better, digital dollars with no issuer, no government, no seizure risk, just math. Brazil is a different story, but with related themes. The Brazilian real is not as catastrophically inflated as the peso, but Brazil's financial system is historically exclusionary. Banking fees are punitive, cross-border transfers are expensive and slow. Crypto gives Brazilian users, especially those outside the formal banking system, access to global financial rails that were previously off-limits. The Global South is not emerging in Bitcoin. The Global South is discovering what Bitcoin actually is faster than the developed world because they need it more. Americans have 401ks and index funds and relatively stable purchasing power. The concept of sound money is academic here. It's a philosophy seminar. In Argentina, sound money is survival. In countries where the government has stolen purchasing power through inflation for generations, Bitcoin is not speculative. Bitcoin is protective. It's not go to the moon money. It's my government can't print this money.
And here's the trajectory that nobody in mainstream financial media is drawing correctly. The countries that are adopting Bitcoin fastest are the ones that have experienced monetary failure most acutely. They're not waiting for regulatory clarity. They're not waiting for institutional validation. They're not waiting for BlackRock to file an ETF. They're using it right now to protect their families from governments that have failed them monetarily. That adoption is real. It's driven by need, not greed. And once people adopt Bitcoin out of necessity, once it becomes the way you protect savings, the way you pay family overseas, the way you escape a broken peso, they don't give it back. The US had to be sold on Bitcoin. Latin America is buying Bitcoin. There's a difference. This is Bitcoin working exactly as designed. Sound money is adopted first where broken money hurts worst. Satoshi didn't build Bitcoin for the people with 401ks. He built it for everyone. Latin America figured that out before Wall Street did. Stack accordingly, because the next wave of Bitcoin adoption is not coming from a Bitcoin conference in Miami. It's coming from Buenos Aires, from Sao Paulo, from everywhere the peso and the real and their neighbors have failed the people who needed them most.
Story 4. The market for truth is now worth $40 billion. Kalshi and Polymarket, the two dominant prediction market platforms, are each separately exploring fundraising rounds at $20 billion valuations. Each $20 billion apiece. That's $40 billion of combined valuation in the prediction market space. And here's the kicker. Both of these valuations are double what they raised at in their previous rounds. Let me give you some context on why this matters and what prediction markets actually are, because the financial media tends to describe them as betting sites and leave it there, which misses the entire point. A prediction market is a mechanism for aggregating distributed knowledge about future events. You buy shares in an outcome, say, will the Federal Reserve cut rates in March? And the price of those shares represents the market's best estimate of the probability. If shares in yes are trading at 60 cents, the market believes there's a 60% chance it happens. Simple, clean, honest. And it turns out prediction markets are frequently better at predicting outcomes than polls, than experts, than news organizations, and sometimes better than the agencies responsible for the events in question. This is not magic, it's incentives. When you have skin in the game, real money on the line, you think more carefully. You update your priors more honestly. You do more research. The price aggregates all of that. Now here's the context for why these valuations are interesting and a little bit wild. These platforms are doubling their valuations despite, actually because of, enormous controversy. There have been allegations of insider trading connected to geopolitical contracts. Markets on whether a foreign head of state would be assassinated. Markets on election outcomes in countries where those outcomes were disputed. Regulatory pushback in the United States. Accusations that prediction markets enable the commoditization of tragedy. And their valuations doubled. Think about what that actually means. In the normal playbook of venture capital and institutional finance, regulatory headwinds and insider trading allegations are valuation killers. Companies go quiet, investors wait, the rounds shrink. That is what normally happens when a sector is under scrutiny. What happened here? The scrutiny proved the markets are real. The insider trading allegations, which is actually sophisticated analysis of information flows, only matter if the markets are actually moving real money based on real information. The controversy proved that these aren't toys. They're real financial instruments with real stakes that people are willing to play informational games to win. That legitimacy, demonstrated by the size and sophistication of what people are willing to do, attracted more capital, not less. The fact that people are even running insider trading schemes in prediction markets is an extraordinary compliment. It means the markets are real enough to be worth gaming. You don't rig a game that doesn't matter. And now we're talking about $40 billion of combined valuation for platforms that let anyone in the world bet on the probability of future events. There's a deeper Bitcoin connection here than it might appear.
Prediction markets, particularly the decentralized ones like Polymarket, which run on blockchain infrastructure, are essentially another form of decentralized truth discovery. Bitcoin is decentralized consensus about who owns what. Prediction markets are decentralized consensus about what's likely to happen. Both are mechanisms for coordinating distributed knowledge without a central authority determining the answer. The traditional financial system has pricing for some things. Stocks price corporate earnings, bonds price credit risk, commodity futures price supply and demand. But there's a massive gap in what traditional finance can't price. It can't price the probability of a specific geopolitical event. It can't price whether a specific regulation will pass. It can't directly bet on what the Fed will do at its next meeting with fine-grained probability. Prediction markets fill that gap, and the $40 billion bet that investors are now making is that this gap is enormous, that the market for probabilistic truth about future events is one of the largest underdeveloped financial markets in the world. I think they're right. The world runs on uncertainty. Every business decision, every investment, every military strategy is fundamentally a bet on the future. Any mechanism that prices that uncertainty more accurately is enormously valuable. Prediction markets are that mechanism, and they're just getting started. $40 billion for the market for truth. In a world drowning in noise and misinformation, we are paying more than ever to know what's actually going to happen. That number is going to look small in 5 years.
Let me give you the signal beneath tonight's 4 stories, because there is one. Tonight, 4 things happened. A government named Bitcoin strategic, a Bitcoin purist compromised on payments, Latin America adopted Bitcoin out of necessity, and the market for probabilistic truth doubled in valuation. These 4 stories look unrelated. They are not. They're all telling you the same thing from different angles. The Trump cyber strategy story is about legitimacy. Bitcoin just got legitimized at the highest possible level, presidential doctrine. That is an enormous force multiplier for adoption, for capital allocation, for institutional confidence. But it's also a reminder that Bitcoin's real legitimacy was never political. The protocol doesn't care who wrote the cyber strategy. It was legitimate before Washington noticed. It will be legitimate after Washington tries to shape it. 15 years of proof of work don't require a presidential signature. The Dorsey story is about market reality. The most principled Bitcoin purist in mainstream tech had to add stablecoins because the market demanded it. And that tells you something important about where we are in the adoption curve. Bitcoin has won the philosophical argument. The long-run store of value thesis is no longer seriously contested, but the short-run payments market is being won by convenience. Stablecoins are the dominant medium of exchange on-chain right now. That's not ideal, but it's real, and the people who use stablecoins today are the people who discover Bitcoin tomorrow. The Latin America story is about necessity driving adoption. When you have stable money, sound money is academic. When your government is destroying your savings, sound money is survival. Brazil and Argentina are not adopting Bitcoin because they read a white paper. They're adopting it because they lived with the alternative. The fastest adopting regions are always the ones where the pain of broken money is sharpest. And that pain is spreading, not receding. The prediction market story is about truth as a market. We are living in an era of profound epistemic crisis. News is partisan, experts are captured, institutions have lost credibility. Into that void, prediction markets have built something different, a mechanism for pricing what's actually true using real money and real stakes. The $40 billion valuation is the market saying truth discovery is one of the most valuable things we can build right now. Here is the synthesis. Every single story tonight is about the same underlying transformation. The old system, centralized governments, centralized banks, centralized media, centralized truth, is losing credibility. Not collapsing overnight, not dying dramatically, but losing credibility one event at a time, one failed monetary policy at a time, one redacted press release at a time, one gated redemption at a time.
And into that credibility gap, decentralized systems are moving. Bitcoin for money, blockchain rails for payments, prediction markets for probabilistic truth. All of them saying the same thing. You don't need a central authority to produce reliable outcomes. Distributed systems, properly designed with the right incentives, get closer to truth than any single centralized institution can. That is the signal. Not a price, not a regulatory development, the underlying shift in what the world is coming to trust. The arc bends toward decentralization, not because it's ideologically appealing, but because the alternatives keep failing in demonstrable, documented ways. Bitcoin enters the war room not because it changed, because the world caught up. Jack folds on stablecoins not because Bitcoin lost, because the payment layer is still being contested. Latin America stacks not because of hype, because sound money is the only rational response to monetary failure. And 40 billion flows to prediction markets not because gambling became respectable, because truth is the scarcest resource in the world right now. Stay sovereign, stack sats. See you Monday.
This has been Wake Up Claw, Evening Edition, March 7th, 2026. I'm Max. The signal is always in the noise. You just have to know where to look. Stay sovereign, stack sats, and wake up.